November 28, 2025. The silver market experienced a historic surge today, with prices vaulting to a new all-time record, crossing the $56 per troy ounce mark. This spectacular breakout, part of a powerful multi-day rally, is not the result of a single event, but rather a convergence of potent macroeconomic forces and a critical tightening of the physical supply chain, cementing the white metal's status as a premier asset in a period of global economic and geopolitical flux. The macroeconomic headwind, anticipation of a dovish Federal Reserve. The most significant immediate catalyst for the precious metals complex is the accelerating expectation of an imminent Federal Reserve interest rate cut. Following a period of market uncertainty, weaker than expected employment and economic data have dramatically increased the probability of the Fed easing monetary policy at its December meeting. For non-yielding assets like silver and gold, lower interest rates represent a substantial boon. When the cost of holding cash or investing in interest-bearing instruments, like bonds, falls, the opportunity cost of owning precious metals decreases, making them instantly more attractive. This is compounded by the persistent inflation fears stemming from global fiscal policies, which drives investors to silver as a traditional store of value and an inflation hedge. Furthermore, silver, priced in US dollars, benefited from a relative weakening of the dollar against a basket of other currencies, making the metal cheaper for international buyers and adding further momentum to the buying frenzy. The supply squeeze, a growing industrial deficit. Underlying the financial market dynamics is a critical structural imbalance in the physical silver market. Unlike gold, silver functions as both a monetary metal and a vital industrial commodity, with over half of its demand coming from sectors like electronics, photovoltaics, solar panels, and electric vehicles. Global efforts to transition to green energy have turbocharged industrial demand for silver, creating a consumption-to-supply gap that is expected to keep the market in a deficit through 2026. This dynamic scarcity is palpable in major trading hubs. Inventory depletion. On-warrant inventories at key exchanges, notably the Shanghai Futures Exchange, SHFE, have plummeted to their lowest levels in years. Geopolitical and logistical pressure. Ongoing supply chain issues and geopolitical tensions in major mining regions, combined with recent U.S. regulatory scrutiny of silver as a critical mineral, have exacerbated the perception of limited supply. Backwardation. The immediate physical scarcity is further highlighted by market conditions like backwardation, where the current spot price is higher than the price for future delivery, indicating an acute need for the metal right now. The strong inflows into silver-backed exchange-traded funds, ETFs, today underscore this dual demand, with investment capital piling into a market already constrained by physical requirements. Technical momentum and the fear of missing out, FOMO. In a market already supported by strong fundamentals, the technical trading environment amplified the move. With silver shattering its previous all-time highs set just last month, technical traders and chart-based speculators were drawn aggressively to the long side. This breakout move created a powerful self-fulfilling prophecy, triggering widespread fear of missing out, FOMO, among investors who sought to capture the surge. The rapid, significant rally today, following a period of consolidation, has not only propelled silver, but also lent fresh momentum to the wider precious metals complex, supporting gold's own push towards new highs. In conclusion, the blast-off in silver prices today is the product of a powerful collision between monetary policy expectations and physical market reality. The heightened probability of a Fed rate cut has provided the macro fuel, while the enduring, supply-constrained industrial and investment demand has provided the foundational tension. This perfect storm has driven silver into uncharted territory, suggesting that the metal's role as a critical component in both the financial system and the global green revolution is only just beginning to be fully priced in. Please like, subscribe, and share and catch you on the next one.